Good evening. This is Ken at Tortoise Capital with a review of the weekend report for April 27th, 2019. Let's take a look at what we have. Market in bullish quiet favors the long side. It's been overbought on an annual and a 10-day basis using our NDX indicators. See the blended monthly rebalancing holdings have been doing very well. This month, reevaluation is due this week coming up, and you can see the leaders going into the clubhouse here on as of Friday. In the market mosaic, price is solidly into green bullish. Slope of the 50 is yellow neutral, so it's still not quite as strong as we'd like to see there. The ADX is a very strong upward trending 35.7 as we push all-time highs. The risk index is the 30 period moving average of the VIX divided by the 10 period. The boundary between risk on and risk off is 1.0. We have a reading of 1.069, so we're in risk on mode. When we look at the last 5,000 trading days to compute the z-score, we come in with a score of 0.66. Here you see a 90-day histogram of that. This was a tell right here, which has really allowed us to benefit from the gains of the last 2 weeks. When it bottomed out at minus 2Z, had a nice positive move, slow decay, no big sell-offs in here. And then when it dipped slightly into the red and then quickly got back into the spring and summer. So this has been a favorable condition for long side swings. The theoretical exposure in ETF2 is suggested at 90%, so the globe is looking pretty good. Looking at some blended monthly rebalancing portfolios, notice everything is on the green except Latin America, and then later on down here, Latin America, Brazil, and Ag. Big winners this week continued to be U.S. real estate and the small caps. Only thing that really lost significantly was in EFA, the globals, which was basically flat, along with emerging markets. So it's still U.S. Leading the way here. Technology, discretionary, real estate, those are the big winners. Would expect them to continue to lead the way. That's where our longer term focus should be. Had that nice bounce in the speculative Russell 2000. I think that's because of the success of the broad market getting through the all-time high markers this week. So maybe the speculators are coming on board and continuing to push. Healthcare in Brazil, I think both of those are responses to such oversold conditions. So that's a nice short-term pop. I'll be playing for additional momentum, but I'm not expecting it. But if we get it, then I'll be happy. In the Dow 30, some big volatility movers here. I mean, Disney, Microsoft, American Express on the upside, Intel, Chevron, and 3M, which got smashed, is already starting to show signs of some recovery and making a base. So a mixed bag across the full range of these very liquid large caps. One more reason I like to trade them. Looking for JP Morgan to start building on some of these gains, and United Tech as well. But I mean, Microsoft, you got to sort of love that greens across the board, just quietly getting it done. In the sectors, it's technology, semis, software, more technology. Even the home builders had some gains. ETF Max, looking for the winners and losers of this 1 week. Looking for additional momentum out of software and services. Palladium has some possibilities. The Dow Jones Internet Index and small cap growth. Out of the big winners, only China consumers and China financials had some weakness. So maybe the FXI position, we can start looking at that for additional weakness. In the market health check, you can see the 30-day range, the 10-day range, and then the 1-day range. We're just pushing the upper boundaries of all those. I'm going to continue to reward momentum. I'm looking for price ladders on the way down are marked off so that we can. So if we do see a withdrawal, we have some gains. But this is really that 20-day move that the risk index kind of keyed us into. This was where it was going to fail if it was supposed to fail here if it was going to. But the fact that it didn't and broke out to new above the swing high was that was the tell. That was the end of fall that led into summer. And then we got some nice gains all the way through here by monitoring that the seasons. We had another brief flirt with fall here, and we're right on the boundary of getting back into the summer. So the size of this leg could be the size of the next leg. So we're looking for that. ETF regional report, 9 out of 10 are on buy signals. It's the S&P better than the world with 66 better than 58 on the strength rating. And then U.S. technology just really dominating right now. And then inside the sector spiders, again, you see technology and then consumer discretionary leading the way, only healthcare lagging, which is why I'm kind of looking for those as buying quality on sale inside that healthcare sector. U.S. generally well above average except for the small cap growth and value. And then technology just really crushing it. Reinforced through the ETF2 lens. So this is a different way of computing relative strength, but it's really finding the strength that is derived from price, sort of no matter what. The green and white are areas where there's new strength available, and so that I'm looking at consumer discretionary, the Russell 1000 growth, India, S&P growth, mid caps, all of those offering some gains. Shifting to the Monday daily report. No signals on channeling and overreaction. You can see the Max Payne candidates here. Pfizer and Merck inside the consumer healthcare area. I would also just point out the whole energy complex here with ExxonMobil, oil, and then natural gas is a possibility. Relative strength leaders here. Verizon, Disney, American Express, GE, and Johnson & Johnson. So in terms of pair trading, Johnson & Johnson as a leading candidate in a sector that just may be turning around, there may be some more room in Johnson & Johnson to keep going. Just a handful of frog quality numbers, a handful of RSI2s that signal. So Walmart would be of interest here. Was a loser on Friday, but was also a 551W. And the fact that it has a low RSI2 score means Walmart is poised for some gains. Intel was a channeling and an overreaction and a 5DD and a 4.8 to 1 risk reward index. It's very volatile and it has a score of 1 on RSI2. So what's not to love about Intel just on that basis? So here's a quick look at that Johnson & Johnson as one of the leading candidates from the 10, because it's so near its 10-day high, that means it's a 10-day min pain. But I want you to notice the long-term opportunities that occur when you get sharp moves into the winter. So here was a symbol was happy around 146, massive sell-off in the winter, and then the turning point where winter becomes spring. It is confirmed by crossing its little RL4 down here. And then that spring move into the summer, then the resumption all the way through the summer, dips into winter, and then starts once more into summer. So you have some opportunities in here on the failure to fail further with stops either at the swing low, which has worked the entire time. If this one got you out because of the RLXD, then that one should get you back in. And so you have a fractional loss and then a long-term gain. And then a reinforcement here once the spring has started. Now this is poised to continue on. And I would argue that this return to long-term fair value is certainly within play. And then if it gets above that price, then it's free and clear, right? So that's a quick look at the min pain idea. All right, so back to the report. That was just a quick look at that Johnson and Johnson trade. Let's take a quick look at Walmart and Intel while we're here, just for the heck of it. So Walmart is of interest here. We've had that the big sell-off, and then one leg, two legs, three legs. This big sell-off found support on Friday and a resumption. So I'm prepared to take that as the anomaly and a return to fair value here. So I'm going to be a buyer of Walmart. I just want to point out the after those big reverse those big moves and reversals when the dragon turns and the owl entries here and then a pocket reinforcement here and here are certainly viable. And you'll notice like this one after the turn into the spring. And then the crossing of the zero line to indicate summer certainly has some potential. We're going to take a look at Intel real quick. So we have been building a nice position in Intel. I missed the earnings announcement on that thing, and so got caught. I ended up exiting here because of that give back. But I'm now ready to start treating this as a critical state. And if technology continues to work, then I would expect a return to fair value or a further collapse on Monday. So inattention to detail, I gave up those gains, but we still had made some bank based on the initial three positions, which were built in the usual way, looking from winter into spring, following up in the summer with a continuation of summer after the fall once, and then twice, and then inattention to detail on one day. Uh, got caught on a adverse gap, so that's the nature of swing trading. Um, so lesson learned. Okay, to resume. Okay, shifting to the ETF 30, we got just a couple RSI 2s. Notice a weakness in the energy sector with oil exploration, energy, and oil. All were the one day big losers. Strength was in metals and mining. A handful that test out well on the auto framer. Big strength down here in financials is continuing on the breakouts in all these different time periods, and then also in the S&P 500 coming to all-time highs in all of those look-back periods. So market is poised for continuation. Daily pension stretch, Disney, Microsoft, Morgan on the upside, stretches to the downside, 3M, Merck, Pfizer, Intel. Auto framer with the mechanical frames in the usual fashion. The RLFF, these are the ones that on swing term bases are the most number of ATRs below their long-term fair value. That's the top shelf in the green. So these are the deeply discounted value plays, not surprising. Pfizer, Merck, United Health, 3M, and Verizon. And then the ones that are well ahead of their fair value, these are the long-term gainers. Notice the tech dominating are Microsoft, United Tech, Apple, Cisco, and then Home Depot coming in. The daily squeezes are ones that have had large average daily ranges, but which were compressed abnormally on Friday. So if they pop out of Friday's trading range, then there's a probability or a possibility of a strong one-day directional move. That's all part of the swing trading one day at a time. Some old reliables in there like IBM, Oracle, Morgan, Wheaton. I'm sorry, that's Brazil, and then Travelers. So there's some real choices that I'll be ready for on Monday. The Four Seasons, again, I'm going to be looking at those that are deep in the winter, like IBM, Chevron, Verizon, and Merck, and starting to make that turn. I also like the springs of United Health and GE. That was where the recovery is starting to work already. Summer times, but which have low Z-scores, are ones that are above their zero line, but still have much more ground to regain. So I'm liking Morgan and Disney in that sense. All looks good here with the 30-period regression line of the S&P pushing all-time highs. And you can see that nice recovery from deep despair. And the regression line is still even with or above its 10 period moving average, but it hasn't become fully extended yet, so it's less than one sigma above long-term average. So that's still, there's more room for that to go, is what that means. And then this little recovery is the pause that refreshes. So there's much more upside available. In the historical concept, that's how bad those 30 days of sell-off had been during the spike downward. Um, and you can see that's that double bottom there are those two. And the 90 slope of the 90 regression line is very strong. The 30 has recovered nicely, and the rising 10s means that's the kind of behavior you get. Slight pullbacks find support, and it keeps finding reasons to keep going, so don't fight that. But coming up at at important resistance. If it gets above this, then it's free and clear, and it's all USA. Okay, so that's a quick look at the market reports for this weekend. Canna Tortoise Capital. Keep your risk measured and your powder dry.